This is Farm Progress Company's Dateline Drought.com, presented by Genuity Drought Guard Hybrids. Hello, everyone. Well, I've been comparing those latest drought monitor maps, taking a look at the one issued this week and comparing it with a week ago. You know what? There isn't much difference at all. That map shows very little change over the past week, and especially when you look at the western Corn Belt area and the Plain States, there has been precious little improvement. Notably, Nebraska and Kansas remain very firmly in the grips of drought. Some press attention in Business Week to the dry conditions around Decatur, Illinois, and the water challenges in that community that is such a major corn and soybean processing town. It points out that ADM and Tate and Lyle have been staying in very close contact on a week-to-week basis with the city of Decatur about the low water supplies in that central Illinois city and the concern at those two major processing plants that have significant water needs about how much water there might be available going forward. But we do note that this red-hot farmland market apparently is not being chilled at all by the drought conditions. Latest reports from the Federal Reserve banks in Chicago and Kansas City indicate that the values climbed substantially over the past year. When you take a look at the third quarter compared with a year ago, in the state of Iowa, which falls in the Federal Reserve District served by the bank in Chicago, farmland values in the third quarter were estimated to be 18% higher than a year ago. And when you look at Nebraska, which falls in that district served by the Federal Reserve Bank of Kansas City, farmland values by the rural bankers were estimated to be up 30% from the third quarter of 2011. And there seems to be quite a bit of optimism that this could continue in the weeks ahead. At least a third of those bankers surveyed by the Federal Reserve Bank of Chicago indicated they think farmland values will be higher still in this current fourth quarter. Thanks for joining us here at Farm Progress Dateline Drought.com, presented by Genuity Drought Guard Hybrids.
The soybean market sent out a clear message today, and it wasn't bullish. Indeed, if you thought the bounce of the past couple days meant selling was over, think again. Beans could face a new test perhaps sooner rather than later. Futures started selling today during the trading in Asia and never fully recovered. January futures held lows from earlier in the week, but closed at the lowest level since June. January finished off 17 cents at 14.02. Today's weakness doesn't necessarily mean the market is going lower, but holding now will take some help. A strong week of export sales and tomorrow's tally from USDA would help. Traders expect around 15 million bushels, double last week's level, but that might not be enough to get the job done. The other key could come from the outside markets, which suffered again today on fears about the fiscal cliff looming in Washington. Those concerns won't end quickly and could increase ahead of the weekend. While shipments of soybeans are running at record levels, sales of corn and wheat have been sluggish, to say the least. Hopes that both could be ready to improve kept prices from slipping as much as beans. Traders still don't expect big sales tomorrow from corn. The average guess is around 12 million bushels, left at less than half the rate forecast by USDA for the marketing year. But prices from competitors out of South America and the Black Sea are on the rise, which could ultimately turn a little more business here. December futures ended 4.5 lower at 7.21 1/4. Japan and Taiwan both purchased U.S. wheat today as a flurry of deals surfaced around the world. Algeria bought up to 20 million bushels, but that business is likely to go to France. Still, European exports are running at a pace that suggests they could be over by February. Egypt, meanwhile, struck Ukraine from its bid sheets after the on-again, off-again export ban from that Black Sea supplier is apparently on again, this time for real. Forecasts remain mostly dry for the plains, adding additional support from concerns about the poor state of the hard red winter wheat crop. Nearby futures at all three exchanges lost 3.25 on the session. Chicago December ended at 8.45 1/2. Kansas City finished at 886.5, and Minneapolis closed at 920.25. Keep up with the drought situation across the country by visiting www.datelinedrought.com.